Morning.
Hey George, man, I'm so happy to see you. Really
Good to
glad to
see you,
see you.
Michael.
Um, George, my man, listen, I missed you last week. I know that, I've said to you and I recognize you can't always come. And, I told you before, on Tuesday, part of my routine, I go to the park and I do my run and I get myself in the mindset. And I always think, like how grateful I am that you've been here with me all this journey and kind of supporting me. I'm really, really grateful for that, man. But if you decide that, you want to new adventures, man, I totally recognize that as well.
No, no, no. I'm thrilled. I start.
Is it me or is it him? I think it's him.
Yeah. So this is wonderful, and I appreciate what you're doing. I read everything you do, and I'm a big fan and a big friend. So thank you, sir.
Thank, no, no, thank you, George. Okay. So I don't even know where to start. Um, I basically had called this webinar um, lace up your boots in the sense that I believe that it's not my responsibility or my ability, even for that matter, to make bold macro calls. But 2024 was outstanding and we were up 75%. And I cannot for the life of me expect to repeat that this year. So I called it lace up your boots because I genuinely believe that, man, at some point, the markets need to pull back. It's just insane. Um, I, I, I can't even explain this anymore. Um, but anyway, I'm not in that job. I don't make those type of calls. I'm in the job of trying to pick out individual positions. And I'm going to talk a little bit about some changes that I did to the portfolio today. I'm not going to talk for too long because I have found that I don't know, but I think it's more beneficial for people to ask questions because, when you think about something, someone else is thinking the same thing. So I'm going to talk less than I normally talk, and then we're going to open it up to Q&A. So, uh, I detest recommending to sell a stock. It's just, oh man, it's something that I never really find a particularly exciting experience. People have all kinds of commitment bias, like, oh my God, the stock is going up, so it's like party and it's this, and I'm like, and I don't want to be the bad guy, I want to be liked. But anyway, um, I had to get rid of intuitive machines, Luna. Um, I had to get some capital for to open up a position in Palantir, and I'll come to discuss Palantir in a second. We can discuss that obviously when we open it up for Q&A. But my job is not to try and pick the top on any stock. I just have to think about the risk versus the reward that I'm getting myself involved with. And if I look at something like intuitive machines, like anyone can look back and say whatever they want in hindsight. I'm not even gonna waste too much energy on that. Uh, I'm just gonna say my idea here was that the moon economy was going to be strong, and that compared to Rocket Lab, this business was a lot cheaper. Now it has blemishes, and the blemish is that it basically is like really unprofitable. So I recognized that when I took that on board and recommended it out to you. And I said, listen, I know this is not even gross margin profitable. It's like completely unprofitable. It's just a dream, really. But they had received in the past 12 months three massive contracts from NASA Space Agency. Massive contracts. And I'm like, okay, say what you will, man. But if you're going to get more than one contract from NASA, uh, I'll say that they must be quite satisfied with your work. And they're not going to be deploying capital, large sums of capital, into something that is not going to work out in terms of being economically viable. We could put the discussion about evaluation, blah, blah. But, that was my kind of general idea. And the advantage that you have when you buy something with relatively low expectations is that you don't need to be a hero. And I'll just take that segue of low expectations, say, Michael, you talk about low expectations, but how in the right mind can you recommend something like Palantir, particularly given that you told me to sell that stock at $28? When it was at $28, we bought it at 10, it went to 7.5. And from that, it went up and up to like 12, 14. At some point it reached 18, then 20. And when it got to 28, I thought, okay, I'm kind of risk rewarded. I don't think that I see it. And now there's at 100. So like up 3x, and I've been what have I been doing? Sleeping on my like what's been going on? And then I kind of recommend it. I get it. And I want you to understand that it doesn't make any difference what the share price did on the journey to here. And I know everyone is telling me, oh, Michael, this stock, you missed it, blah, 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 you got FOMO. It's nothing like that. I couldn't care less what happened yesterday. And I can tell you countless examples of that. I'm just saying to myself, wow, the business, listen, I don't even like the CEO, but anyway, we'll put that aside for now. The business is growing at a stupid rate, at massive scale, and like printing like money. I call it free cash flow, but you can look at other versions of this, like profitability, like like nobody's business. Um, so we I can't explain it. People talk about high quality business being something that measures up close to a rule of 40. That means where between the growth rate and the free cash flow margin. So let's say, for the sake of our discussion, that if the growth rate is 20% and the free cash flow margin is 20%, those 20 plus 20 is 40. A rule of 40 is a good business. And according to my rough estimates, looking out to Q1, which is we already done 1 month of that, they're going to be on a rule of 90. So I'm like, yeah, it's a really like high quality business like I haven't seen. Now, the valid counter argument to that is the whoa, 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 whoa. This is price is more than 110 times free cash flow, and you need heroic growth rates for it to even in 3 years to be, at something like close to like 4.5 billion of free cash flow to even come close to us discussing whether that's a reasonable valuation or not. Now, I'm waffling a little bit, but let me just say one thing. One of the advantages of doing this job for a long time, one of the advantages is you get to know a thing or two that you can build your experience on. And I like businesses that one of your biggest partners are either the US government or the Fortune 50 companies. Because those guys, if there's a recession, if, there's a bombing or whatever, they have no problem. Money is going to come. So there's not that much risk in terms of them, as in Palantir, reaching those revenues that they set out. And I, in fact, expect that they'll continue to be their guidance over the next 12 months because they're in that business. They know, like they've already contracted out those revenues. They know exactly what's coming in. Like they can probably even tell you how many decimal points the earnings per share will have. But you know, it like it's just a very resilient business, and I get all the reasons not to like it. It's a meme stock, and I know, like a lot of rubbish about like why not to like it. I agree with a lot of stuff, but I'm not in that job. I don't make these kind of, oh, this guy said that on that podcast and this, that, the other. I just want to I have my process, and my process has developed, and as I grow and mature as an investor, and I work so damn hard, I learn to lean further into my process and have more conviction. And that's really what I'm trying to do. I'm trying to get you to understand that this way of investing, where you're buying on the future free cash flow of the business, it works. And it's not perfect. I don't know of any strategy that is perfect, but it's good enough. Uh, and it's, as I said, it's not perfect. There are going to be failures from time to time, even on stocks that I believe, like Sezzle or whatever, that are going to do well. There are going to be failures, and they happen, but it's repeatable and it's good enough, and you can scale it. You can continue to do those reps. You can continue. So that's the kind of thing that I wanted to mention to everyone. And I'll open it up now to some Q&A and let people kind of ask their questions if they want.
Hey, Michael, this is Ajay. I have a question for you.
Hello.
Uh, I try to understand. I haven't read your article yet. It's a busy day, but I want to have the clear understanding. Uh, the main reason that you want to sell the Lunar at this price because of we need a cash to purchase. There was another opportunity. Is that right?
Correct. That's correct.
Okay.
Yeah.
So when I look at the portfolio, I see, like DraftKings hanging in there for a while.
Yeah.
What was the particular reason that going with Lunar or
Mhm.
you didn't see any near growth with the Lunar? Okay, even though the price share we were planning to get, $25, but
Mhm.
I want to understand
Yeah.
the
That's a
reason
very
is
valid
Lunar.
question. That's a
Thank
really,
you.
really valid question. Thank you for asking me. So I was very much thinking this way. DraftKings is much more stable. It's not exciting. It's been a dog for my performance, but it's much more stable. And I will most likely exit it in a few weeks when the earnings come out. And I don't, with, so the range of outcomes for DraftKings is relatively small. The range of outcomes for Luna can be quite large. And if the market's enthusiasm for a very much unprofitable business dries up, and this stock comes back to, let's say, 12, what then? There will be nothing holding it back. This business isn't like you and I will have like grandchildren by the time this business actually makes any cash. Like it'll be a long time from now. So with DraftKings, yeah, I mean, I recognize the problems with DraftKings, and I know that everyone's like, oh, this business is gonna. Okay, we can talk about DraftKings in a second, but in terms of with intuitive machines, it's the biggest spectrum of outcomes. The market has been really hot, really, really hot. Like I've not like I was expecting to sell draft as in intuitive machines. I was expecting to sell it like in 2026. And I genuinely believe that was a reasonable way to get there. And since that return has been pulled forward so aggressively, I think, okay, I don't need to be a hero. Just lock it in and then move on. Now, with DraftKings, Gate Cloud Technology, man, these businesses have been difficult for me because in my mind, there's nothing wrong with these businesses. There's nothing wrong, but the market hates on them. So I've said many times with DraftKings, with Samsara, Gear Cloud, depending on the company, I have like a 6 months or less time horizon on them because I had bought them, I'd recommended them, and I am wrong. The market ultimately is the ultimate judge, and they're not getting any traction. And I have to take a rest and say, okay, you know what? Um, when the time comes, whether it's DraftKings that I'll sell as I'll sell in Q4, which I said many times already, and Samsara the same, or whether it's Sentinel One and Gear Cloud that I'll sell in the summer, the time horizon has come and the thesis either worked or didn't work. And that's the great advantage of the way that I invest. that I know the range of outcomes before I get involved. I'm saying, okay, I would like to see in about a year and a half my thesis working out, and I expected to make this amount of free cash flow. So before buying, I know what I'm looking for. Most investors, they buy on the enthusiasm of the day and they don't have a plan. They're like, oh, like what do I do? Do I buy? Do I sell? Do I hold? Like, but I have a very clear view. It's not always right. And I've made many mistakes. I talked about many times how I sold out of Pin Duo Deal, which is PDD, at a negative 35% loss. Same for LifeMD, because I have a very clear set of outcomes that I'm looking for. And if it's not hitting that, then I need to get out because I'm wrong. I'm not in the business of saying, okay, I know more than the market. The stock is cheap and undervalued, and the market doesn't get it. The market gets everything. Whether you like it, the outcome that the market provides you or not is a different question. But man, and you can stay and say, oh, you know what? I don't know when you started investing, but I remember for a long time, man, everyone's like, oh my God, Tesla's it's like such a dog. Tesla's a dog. Tesla's a dog. And it used to be like in early 2010s, like, oh, Elon Musk is ill, the stock will go down. Elon Musk is back, and the stock will go up. It was like complete madness. And now, obviously, fast forward 10 years, and everyone's like, oh my God, Tesla, 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 Tesla. But you a lot of those kind of value investors were saying all that period of time coming in 2014 2016 they were all saying, oh, you know what, stock is overvalued. And if they were even in like when they said there was the most overvalued at that point, not saying every stock is the next Tesla, but I'm just saying that you can't come to the market to prove your ego like certain people do, that they know more than the market. Like the market is the ultimate judge, and you have to recognize that you don't have all the answers, and you have to be humble enough to have a strategy that allows you to A, be open-minded, B, be calm, and C, be ready to readjust when things um, don't go how you wanted them to go.
Thank you.
Thank you. Does anyone else want to ask any questions? All right. So
I do.
sorry, I'll answer this one for George just a second. So
Yeah.
So generally speaking, I would have waited until it hit my $25 target, but it I haven't seen the prices today, but it was very close. It was very close to 25, and earnings are coming up, and if it's so close already, do I really want to take that risk? It could very easily pop on earnings and go on to $100, but I think about the people that I'm talking to on the call and the responsibility that I have to them. And I always have to think about protecting the downside. I say this many times, but I become slightly better as an investor when I start thinking about preserving the capital rather than trying to make and squeeze the capital. I know it's not a very good answer to the question, but it's close enough that I think that whether it's 22 or 25, I think that is close enough that it doesn't make sense to, for me at least, to continue to have a positive view on it.
Okay. Thank you.
Okay. Would anyone else like to ask any questions?
Mine's not a question, but I just want to say your guts on the Palantir call is really awesome. I
Don't
know
know about
that you're
that.
not someone who cares about, who's looking for ego and stuff, but
Mhm.
that is not an easy call to make. And
Yeah, I know.
I'm really rooting for you on this one.
Yeah, yeah. The thing that people look for passion in different ways, and I love the business that I'm in. I sell subscriptions, but I love the business that I'm in, where you're only as good as the last bad call you've made. And I love this game because there's never a moment where you can rest. You always have to get up when you've been beaten down and reprove yourself. And that's what I'm passionate about. Um, I think that, everyone on this call, given enough time, will reach their financial targets, but that's okay. There's more to life than money. But I'm extremely passionate about um, proving that this way of investing makes sense above different styles. Um, so yeah, we don't know how it's going to work out. Stocks can go up today, tomorrow, and then like it can just completely take the air out. I've seen this so many times. Um, so yeah, we'll have to see. Like, give it like 3 months, and then we'll see how it unfolds. Um, but at times, like sometimes, when intuitive machines reported their results in uh, early November, a few months ago, um, the stock came on the back of Rocket Lab. So Rocket Lab reported the peer reported their results, let's say, for example, on the Monday, and the stock uh, Rocket Lab went up, and it carried with it Intuitive Machines. Luna went up together, both went up together, and Luna's results came out, and it was very, very strong as well on the pre-market. And throughout the day, the stock went down, 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 and it ended the day at negative 20%. And it reached I think it was around about approximately $10.80 at that moment. Um, and between that day and today, there's been no earnings. It's just been a Trump rally or whatever. Someone said this on Twitter, whatever, whatever, whatever. There's been no tangible um, aspect or earnings that investors could get around. And the stock just pedaled to the metal, turned that around. Even in the interim period, they had a capital raise. So the stock was started going to 14. They had a capital raise, it was back down to 11, I think. And even with all that capital raise and no earnings, the stock went up. So my point is, sometimes stocks move in a certain way on the back of an earnings result, and people love to read into this like, oh, this means that a bad reaction, a positive reaction, oh, the market took this well. It means nothing. It means nothing. You give that business a bit of time to prove itself, a couple of months, and then after a few months, you kind of see, you know what? Actually, the fundamentals do make sense. But on the heat of the moment, uh, it's anybody's game. And everyone likes to believe that you can read into this stuff, but I don't believe you can. And that's why my best investments have been investments where I thought about it, I wrote it up, I came away from the computer, and I said, hold up, I'm wrong when I said that, and I go back. So this happened with a stock called Saracen AI. I wrote it up on the, I think it was the Thursday. I wrote it up on the Thursday. I spent the weekend thinking about it. On the Monday morning, I recommended it to people. So I had 3 days to think about it, and that stock worked out really, really well. The same with Palantir. I wrote about Palantir this morning. I get up at 4:45, so I wrote it up this morning, and I published it on Seeking Alpha Free site. And I went for my jog, and like I'm in the back of my mind just thinking about this, and it's kind of like vibrating in the back of my mind. I'm thinking to myself, I think I've made a bad call not acting on this. Um, and I don't know. We don't know how the cards will unfold, but when I've gone back and checked on myself, I have a good hitting average. I have a worse hitting average where I kind of look something, oh, that looks interesting, let's go. But when I've kind of say, oh, whoa, hold up, I think I'm wrong. Let's think about this again. My hitting average is generally better. Um, I can, I don't want to kind of brag, but I can't remember the time, but it happened. I'm sure it happened. But in recent times where I've kind of gone back on myself and recommended it, and it hasn't worked out. But those few times that are rare, and you can't really hold a portfolio of just like the few times in the year that I kind of gone back and done that. But generally speaking, I did that with Peloton. What else? Oh, can't remember now, man. No, I've done it like a few times, and I've kind of these have been really profitable investments where I've kind of back in the day used to be called Square, now it's called Block. I did that. Um, yeah, these types of investments, um, I have a good batting average. So let's see. I've got my fingers crossed, man. Yeah, let's see how it goes.
Thank you.
Hey, Michael.
Hello,
Hi, this is Bupinder.
I know.
Uh, I'm not bragging, but I'm bragging.
Mm,
I've been buying Palantir since 2020. I have shares for 11.50, $27, 28. So now I have 2,200 shares. So I guess hold on, buy
yeah,
more.
I know you're not going to believe me when I say this, but I promise you, all my might, when I was jogging this morning, I didn't know you were going to be on the call, but I knew that in your head you're going to say buy and hold. I knew.
Yeah.
But you know, I have a strategy where I'm always trying to assess the risk return, and I'm not that kind of passive investor where you hold on to Nvidia for like 20 years or whatever. I'm always trying to think my best about, and I saw a few days ago, I think Apple even hit 400, and I sold at 350. So again, your strategy of holding um, is beating mine. But I got to do something that I feel comfortable with. Um, I,
Well, and I did sell Lunar this morning. I mean, we're up quite a bit. So I did sell it, but Palantir I always saw the long-term potential of this company.
yeah.
So every time it would dip, I'd buy more. Dip, and I'm doing the same with Nvidia over the
Mhm.
years. Well, I have a hard time selling. I
I
fall in
know.
love with companies.
And listen, like this market right now, 2025, I've actually, this is the way I feel it, is they say that in a bull market, everybody's a genius. But I think that in a bull market, everyone is an idiot for not buying the dip because dips last like an afternoon. But you remember in 2022, and we both remember this. Man, it was like starting February 2021, it was just a complete bloodshed. I know you have a lot of macro and mega cap stocks, but even in 2022, I'm sure you were looking at your portfolio and you're like, oh my God, is this going to finish? It was brutal.
Yeah.
And you have to be prepared, you have to be prepared for that. And I don't know how things are going to unfold, but I'm happy for you and we'll see how it goes. Yeah.
Hi, Michael. I have a question. This is Saul.
Hello.
Hi, good morning. You sent out another email this morning for Sezzle to
Yeah.
buy stock now. So I'm just kind of curious, was there anything today that happened that made you want to send out that email today, reaffirming your conviction on Sezzle?
Yeah. So the question is on Sezzle, why I wrote about it today. Sezzle's been a stock that a lot of people reached out to me to say that I made a bad call. And I wanted to go through it again and to think if I've made a mistake. And I don't think I have. I recognize the bear thesis is that it's the same problem that PayPal incidentally has, which is there's just not enough consumers growing and using their products, whether it's Sezzle or it's PayPal. It's the same problem that both companies are having, that there's just too much competition. And that's why Sezzle's active consumer figures are also showing a problem. Now, would be right to say, and people will say, look, PayPal has over 200 million people using it per month. PayPal and Sezzle's got like 200,000. It's not even a peanut. So that is a very valid argument. How can this business be classed as a growth business if the people that actually use it are not really growing a lot? But their part, what Sezzle says, listen, we've discontinued our businesses in India, we've discontinued our businesses in Brazil, and we are trying to churn out of these low economic value consumers and spend more of our resources targeting North America, meaning Canada and America. So that makes sense to me. You want to get rid of people that don't contribute to the bottom line, and this is a business that has made a big effort during 2024 to massively increase their profitability. So, at the start of 2024 last year, they were going to make about it was really small, like practically like 5 million of free cash flow. And then as the year progresses, like kind of closer to like 30 million. And now I think that they might actually make this year 60 million. So they're clearly growing, and like it's a 1 billion market cap. So it's really, really small. But they're growing because they have a subscription business model that seems to be highly profitable for them. So it's like the other side of the coin of a firm, whereas a firm declares, and I get it, that they say very clearly, growth is the answer to our business. Sezzle's taken a different approach, possibly due to their having to be forced that position or whatever. There's just different ways of solving a business problem. But they've tried to put profitability ahead of growth. And in this market environment, people just want growth at any cost. But I know that when the cards come down, people actually want profitable growth. So I need to stay true to my strategy.
Okay, thank you.
Okay, is there any questions?
Thank you.
Okay, thank you so much, everyone.
I have one, but it's very simply yes, no question.
Oh, go ahead, yeah.
So look, this is not your style. And that's totally okay. But yesterday afternoon, close to end of the day, around 3:30 Eastern time, I was checking another group. They are like more technical. They were trying to do the technical analyzing of the Palantir, and they pointed out that there is a the huge buying on during the close the end of the day. So they indicate that as a the price may go up, and then they make the call to purchase.